Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. The deflationary, inflationary case for owning silver. So, this article is explaining the patterns that have happened that led to $50 silver in the past and how the same exact things in the economy, in the financial system are happening, right? Recession / depression, credit crisis, 2008 leading to 2011 $50 silver. Same exact things happening. It's just to a more extreme case, so we might even see more extreme prices. So the link to this article from Kitco will be in the description. But before we jump into it, I just want to talk about the possibility of $50 silver, right? Not even 10 years ago, silver was $50. So it's not out of the realm of impossibility. And silver, giving so many advantages to the economy, to the society, to the industrial and technological, even medical world, just makes sense. So let's jump into this article, and we can kind of summarize it and share our insight. Now I'd love to hear your perspective, your insight, your opinion on the markets and where the markets are heading. Right now we see gold at $1,686. And we see silver at $15.19. So silver is definitely being outperformed by gold, but I definitely think that silver will outperform gold sooner than later, especially as the gold to silver ratio is so extremely high. So make sure to smash that like button. Liking each and every one of these videos really helps the channel out. It helps share the videos, helps bring new eyes into my channel, and I really do appreciate it. So make sure you smash the like button. Also make sure you subscribe, because I post daily videos. So in continuation of my last article, when I outlined the bullish case for gold after the panic sell, followed by massive stimulus measures from the Federal Reserve / Treasury Department, it leads me to believe that a repeat of what we saw in 2008 will occur in the precious metals market. Now we know 2008 was the credit crisis, right? It was crazy during those times. The biggest debate that I am hearing on the street is whether this virus is going to provide us with a period of inflation or deflation. While both of these arguments make sense, an open-ended quantitative easing, also standing for QE, and unprecedented policy support from the Federal Reserve should continue to lend an underlying bid for assets that act as a store of value. So always, intrinsic metals or precious metals that have intrinsic value should always act as a store of value, which is an underlying bid for assets that act as a store of value. One of the charts that I always keep an eye on and often gives me some sense as to what the current psychology of the market is the gold to silver ratio, like I was explaining earlier in this video. Looking at the start of 2020, the gold to silver ratio was already at historic levels. It was at 125-1, which it's never been that high ever in the history of the world. Whatever your argument might be, for example, short sellers, prepared market manipulation, I believe that silver was mainly hit due to the massive loss in industrial demand because of the shutdown in China, which I definitely can agree with, right? China's the second largest producer of imported and exported goods, and COVID-19 definitely hit the market hard. So I believe that silver was mainly hit due to the massive loss in industrial demand, which it does make sense, right? Industrial demand, supply and demand are one of the biggest movementers or price momentum that gives the most price momentum in a market, right? Supply and demand is just as relevant as a silver shortage, or even as the gold to silver ratio. So this caused investors to liquidate silver and pile into treasuries and gold. While I am not a fan of treasuries at such low yields, I can understand why someone would sell silver and buy gold, causing the ratio to explode unprecedented as levels seen in the chart below. Right, so gold is seen as the safe haven. Gold is seen as the safe haven metal, and that's what, and gold's a much bigger market, so, there's much more money going into gold, right? But gold doesn't have many benefits that silver doesn't, right? I definitely think that gold is overvalued and silver's undervalued. I think silver is swept under the rug to extreme levels that people don't really talk about. And we can talk about it, right? Because this channel all specifically focuses on silver. Well, it's precious metals, but we know that silver has the most potential, right? Um, so in the coming weeks, the spread of the virus should continue to take its toll on economic activity and be a key reason for the deflationary environment. Like an addict looking for another fix, the Federal Reserve will then further acknowledge the more needs to be done, and this is where silver comes to life and starts to move like what we saw from October 2008 up until April 2011. In the chart above, you see that the gold to silver ratio collapsed in the mid 80s down to the mid 30s. In the chart below, you can see that silver rallied from $8.40 an ounce to $49.83 an ounce. When this was the perfect storm hit, just like we are seeing now, right? The same exact thing that led to $50 silver back then is happening right now. Looking at different approaches to trading these markets, we have expanded by adding a fully institutionalized research department with actionable trading recommendations. Our recommendations are comprised of limit risk option strategies. To receive more information, register here. So from a trading perspective, we have been using multiple strategies to try to take advantage of the expected long-term price appreciation in the precious metals market. And that's something, long-term is really where this is going, because most of us aren't going to be selling anytime soon, right? I'm not going to be selling for 15, 20 years down the line. So the day-to-day price is basically irrelevant. I still keep an eye on it because there are a lot of short-term traders, a lot of marginal traders, and I run a channel that has to inform people on the latest news in the world of precious metals. But I'm not going to be selling for a while, so the longer term is really what I'm focused on. And the day-to-day things can add up to impact the longer term. Like COVID-19 is going to forever change the markets, and then markets will never be the same. So it is still important to keep an eye on this stuff. So we also believe that silver will be a leader from this, and the gold to silver ratio will begin to fall because of an outpacing increase in silver prices. Remember, there are many factors that could affect the direction of metals markets, so be sure to stay up to date on the developments by registering. And then he's kind of plugging the Kitco stuff. So right now we have a lot to talk about. First, he's talking about how the panic sell happened, and that was people, First thing, you don't want to panic sell, right? You're selling yourself short. It's a surefire way to lose money because you're not letting the markets recover. You're selling while it's low. You're selling impulsively, and that's what leads to such bad deals, and that's how you lose your profits. That's how you don't even break even. So then he's talking about a massive stimulus measure from the Federal Reserve Department, pumping in more dollars in the economy, trying to overdo it, oversaturate it, and this is going to lead to what we saw in 2008, which was the credit crisis, which led to $50 silver in 2011. Do you think it's going to take 3 years like it did in 2008 to 2011? Do you think it's going to take 3 years for silver to hit $50? Or do you think it's going to be a much quicker approach? Times are more serious, so remember, things might be crazier than back then as well, right? They didn't have COVID-19 on top of it, so things are going to be a lot different. So I like how he brings in the gold to silver ratio into play, because it definitely has a lot to do with where silver and gold is sitting. I think the ratio should be around 50 or 60 to 1. Actually, that's me minimalizing it. It should be much lower than that, around 16 to 1, but I'm trying to be realistic, so I'll give it around 50 or 60 to 1, which still brings silver much higher. Even if gold stays around $1,700, silver could get up to $50, and the ratio would still be more normalized and more accepted, right? More equal, more average, because right now it's just too exaggerated, it's just too imploded, and it has to, the bubble has to burst sooner than later. So anyways, I hope you enjoyed this video. I am curious what you think about the markets right now. What is your input? What is your insight? What are your opinions on the markets? Do you think that gold is going to keep rising and silver is going to stay low, or do you think silver will start to outperform gold? A lot of people it can be easy to lose faith right now. I just made another video earlier today talking about why I hate silver. I don't actually hate silver. It's just talking about how easy it is to lose faith, especially when markets move like this. It can be very frustrating. So I get it, but I hope you watch the video, because by the end of the video you will be refreshed on why silver has so much potential. So anyways, the link to this article from Kitco will be in the description. Make sure to smash the like button like always. Make sure you subscribe because I post daily videos. This was Silver Slayer. Thanks for tuning in. I'll see you guys soon. Peace.